Fed Chairman Jerome Powell dropped a bomb on markets this week and all but announced the Fed will be raising their Fed funds rate by 50 basis points at their May meeting. What will this mean for mortgage rates and ultimately the housing market? That's what we're going to cover in today's video. Let's get into it. As mortgage rates are surging and people are wondering if the housing market has peaked and is heading for a slowdown, comments from the Federal Reserve are highly scrutinized now more than ever. And Fed Chairman Jerome Powell gave markets news that they may not wish they had heard. Speaking at an International Monetary Fund panel moderated by CNBC, Powell said that it is absolutely essential to restore price stability and that a 50 basis point increase in their Fed funds rate is on the table for their May meeting. These comments pretty much took away any doubt that the Fed was going to get serious about fighting inflation, and the 50 basis point increase is all but a certainty for their May meeting. So what does this mean for mortgage rates and the housing market? In our last video on the topic, I talked about markets getting ahead of where the Fed is heading in terms of interest rates. And in my housing market crash scenario, I estimated that if the Fed raised their Fed funds rate by 25 basis points at each meeting this year, then mortgage rates would get to 5% by the end of the year. Well, the market got there faster than the end of the year and basically priced in that line of action by the Fed into the bond markets, which heavily influence mortgage rates. Now it looks like the Fed is going with the second scenario I laid out, where they hike the Fed funds rate by 50 basis points at each meeting. And in that scenario, I estimated mortgage rates would reach 5.6% by the end of the year. Well, markets may already be pricing in that scenario as well. New mortgage rate data from Freddie Mac was released this week that found the average 30-year mortgage rate came in at 5.1% as of April 21st. Based on my estimates, we could likely see mortgage rates head to 5.6% well before the end of the year, as markets are pricing in what they anticipate the Fed to do at this upcoming May meeting, as well as future meetings this year. So I guess the real question is, how high is the Fed going to go in raising interest rates if they are serious about inflation? Using history as a guide, the last time the Fed had to fight serious inflation, they had to overshoot the rate of inflation back in the 80s to bring it down. Inflation measured by the Consumer Price Index peaked at 14.6% in March 1980, and the Fed's fund rate went up 17.6% and stayed above the rate of inflation to bring it down. But here's the thing. The Consumer Price Index came in at an 8.5% rate of inflation in March, and other data shows it will be accelerating in the future. The Producer Price Index for March was 11.2% higher than the year prior, and it has been a leading indicator for where the Consumer Price Index is heading. And this makes perfect sense. Wholesale inflation will eventually get passed on to consumers. These companies aren't going to just take a hit to their profits so our prices stay the same. That's just not how a free market economy works. In all honesty, if the Fed is really serious about fighting inflation, they're going to have to do much more than a 50 basis point increase at each of their meetings for the remainder of the year. And if they raise their Fed funds rate higher than the current rate of inflation, as they had to do back in the 80s, we could see a crash in housing prices of up to 30% before the end of the year due to sky-high mortgage rates that few could afford. If you're new to this channel and want to know more about how I came up with these numbers, make sure to check out our last two videos on the topic. The first one was the completion of my 5-part series on the question, when is the housing market going to crash? And the other video is an update to that market crash scenario that incorporates the new inflation data from the Consumer Price Index released last week. If you want to stay up to date on these matters and what's happening with the mortgage rates and the real estate market and the market crash scenario, make sure you're subscribed and hit that notification bell down below so you know right away when our next video on the subject comes out. I will be releasing an update to my market crash scenario at least once a month, but it will likely be more frequent than that as we get new data on inflation, Fed funds rate changes, mortgage rates, and the overall real estate market. If you've enjoyed this video, please give it a thumbs up and share it with others on social media to support the channel and help us grow. Thanks for stopping by. I'll see you in the next video.